Appliance maker Dyson has terminated its relationship with Malaysian supplier ATA over forced labor allegations. The move delivers a big blow to ATA, which makes parts for Dyson's vacuum cleaners and air purifiers, as well as Malaysia. The country is a key electronics manufacturing hub, but it's facing increased scrutiny over its treatment of migrant workers, who make up a large share of its factory workforce. Shares in ATA, which owes nearly 80% of its revenue to Dyson, tumbled to their lowest in over a year on the news that Dyson was cutting ties. Dyson, headquartered in Singapore, said it received the results of an audit of ATA's working conditions in early October, launched following allegations made by a factory whistleblower. ATA did not have immediate comment. It's previously denied such allegations and is already being investigated by the United States after an American activist flagged complaints raised by several factory workers. The U.S. Customs and Border Protection Agency has not commented on the investigation. In the last 2 years, it's already banned 6 Malaysian firms from selling their products to the U.S. due to forced labor practices. In July, the U.S. flagged Malaysia along with nations like China and North Korea for trafficking of migrant workers.
Consumer morale in Germany is weighed down by a surge in infections. That's according to market researchers the GfK Institute Thursday. The group's closely watched consumer sentiment index fell to minus 1.6 points heading into December, down from exactly 1 a month before. The December reading is the lowest since June and may dampen business hopes for the Christmas shopping season. GfK researcher Rolf Burkel.
There are the current restrictions. Many people will now be afraid again to go shopping as they worry about getting infected. And as a lot of the Christmas markets have now been cancelled, the buzz is now missing from the city centres, which is bad news for high street shops.
A rise in new infections over the past few weeks could kick away Germany's last driver of growth in the final quarter of the year. And the health crisis is not the only point of concern for GfK. Inflation is another problem.
On the other hand, we are experiencing price hikes and rising inflation, which is currently above 4%. And these two things together are really pinching the consumer sector at the moment.
The survey was released before detailed GDP data, which showed Germany grew 1.7% in the third quarter, below initial readings. The GfK Institute's index also found more gloomy data for Europe's largest economy. Consumer expectations for their personal income and the economy's development have dropped, and the customer will to buy was at a 9-month low.
Shares in ailing Chinese property developer Kaisa Group surged on Thursday. They were up as much as 18% in afternoon trade. That after the firm said it planned to extend the maturity on one key bond, subject to agreement by holders. The move would help it avert a messy default. The developer is closely watched as it has more offshore debt than any such firm except bigger and equally troubled Evergrande. Kaisa has already missed bond coupon payments totaling more than $88 million, though it does still have a grace period. Chinese developers are facing an unprecedented liquidity squeeze due to regulatory curbs on borrowing. That's caused a string of offshore debt defaults and ratings downgrades. Kaisa, Evergrande and others have been scrambling to raise funds as a result. Investors around the world fear any major default could ripple through China's whole $5 trillion property sector. The US Federal Reserve has warned that that scenario could pose real risks to the global financial system.